Today is April 8th, and the Treasury Department has announced some updates to the Paycheck Protection Program, answered some questions, made some clarification, and the EIDL grant program as well. So I spent the last about hour and a half going through their updates, summarizing everything, putting it into terms that are actually understandable, so in that way I can present it to you guys. So make sure you watch this entire video because there's a lot of updates here, and chances are one of them will apply to your loan. Even if you've already applied, there might be some alterations that need to be made. So the first thing, excuse my notes because this is pretty intensive, so I need to refer to them quite a bit. The PPP Interim Rule states that the lenders must confirm the dollar amount average of monthly payroll costs for the preceding calendar year by reviewing the payroll documentation submitted with the borrower's application. Does that require the bank to back up borrower's calculations? This is the question. Does the bank need to verify what the borrower is saying their payroll calculations are? And the answer is no. Providing an accurate calculation of payroll costs is actually the responsibility of the borrower. I assume they're doing this because there's just so many applications out there, and lenders are expected to perform a good faith review on loan calculations in a reasonable time, they say. However, the good faith calculation could be literally anything from just, receiving a document, looking at it, all right, good to go, but they're not liable for any amount incorrect. So it's really important that you watch this and make sure that you applied this correctly. I personally counted something in my initial loan that I needed to later change. So this is really important that you watch this. So what does this mean for you? It means you must make sure your numbers are completely accurate with your loan request. The lender is not held liable whatsoever if you put it the wrong amount. You are liable. Now, they don't say what the penalty is, but I personally don't want to get into whatever the penalty is for saying your payroll is something it isn't and trying to get extra money that you're not technically owed. I personally don't want to deal with that. I'm sure you don't either. So I'd say it's better to underestimate the loan amounts in this occasion. That way you don't have to deal with anything on that end. And remember that there's a new rule where federal unemployment taxes are not included as a payroll expense. And I'll go into that in more detail a little bit later. But that's where I made an issue. I included full payroll, including the employer's contribution in my initial loan request, and I had to alter it later. So that's something that's really important. It was a recent change. Another thing that won't apply to most people, but they made a rule exception to the 500 employee rule. There's now two qualifications. If you have more than 500 employees, you must meet both of these qualifiers. The maximum tangible net worth of the business cannot be more than $15 million, and the average net income after federal income taxes for the last 2 years can't be more than $5 million per year. Now, I don't really like this change because I personally don't think that a business with 500 employees should be able to apply to this small business program no matter what, because there's certain cheats a small business could do in order to still apply for this. And someone that has 500 employees no doubt has an accounting department that's going to be able to file all these loopholes here and get a lot more money out of these programs than small businesses could. And many businesses already try to limit how much net income they make every year anyways. So having a stipulation based off of income doesn't really mean much. Yeah, there's that other stipulation with assets, but something like a tech company might not have a ton of assets and could have thousands of employees and still fit this. That won't apply to most of you, but it's still news either way. Moving on, the CARES Act excludes loan benefit from any employee in excess of an annual salary of $100,000. Everyone's aware of that. But does this exclusion apply to all employee benefits of monetary value? This one actually surprised me, and I think a lot of people out there who are self-employed or independent contractors are going to like the answer to this. The answer is no. The exclusion of compensation in excess of $100,000 annually applies only to cash compensation, not non-cash benefits, including employer contributions to retirement plans, payment of employee benefits consisting of group health care coverage, and payment of state and local taxes assessed on the compensation of employees. So what does that mean? If you're an independent contractor, self-employed, sole proprietor, and you make more than $100,000 a year, only your wages of $100,000 a year are applied to that loan amount, but your health care, your state taxes, all that is included in the loan amount. So that could potentially increase your loan amount by a significant margin because, even healthcare costs for someone who's self-employed can easily be several $100s a month. If your healthcare is $500 a month, that times 2.5 is an extra $1,500 that you can get a loan just because healthcare is included here. Do Paycheck protection loans cover paid sick leave? The answer is yes. Paycheck protection loans cover Payroll costs, including costs for employee vacation, parental, family, medical, and sick leave, but it does not cover the Coronavirus Response Act leave, which was already initiated. I know I've already talked about that, but I wanted to reiterate that. Another little piece of news for the EIDL grant, it's official that it is $1,000 per employee. They've officially announced that. It's kind of unfortunate. It may still be worth in some occasions to apply for both that and the Paycheck Protection Program because the EIDL grant is a little bit more flexible on what exactly you can spend that on. I'll have another video on that in the next couple days that goes more in detail there, especially for sole proprietors. But it's official, $1,000 per employee for that instance. For loan purposes, should I use the last 12 months of payroll or 2019's payroll for calculations? Now, this is something that I made an entire video on because it was a discrepancy that I caught, so I'm glad that they addressed this, because in my other video, I noticed that in the SBA applications and all the bank applications, they were just requesting 2019 payroll information, not the first 3 months of 2020. And I figured that was a major issue because, what if later on they come back and say, hey, we need these 3 months, your application gets delayed. Well, they fixed that, and it turns out that either will work. You can either choose to use 2019's numbers or the last 12 months numbers. So I would go whichever one is higher. That way you can get a slightly higher loan amount, and you should be good to go either way. So I'm really glad that they figured that out and fixed that issue. On to the next question, should payments that an eligible borrower made to an independent contractor or sole proprietor be included in calculations of the eligible borrower's payroll costs? Now, this is a question that I kept getting because a lot of businesses will hire part-time contractors, or on a regular basis, they might use someone as a 1099 worker, and maybe they're self-employed and have 10 1099 workers who do various tasks for them. So effectively, they have quite a large payroll. Unfortunately, the answer is no to that. Any amounts that an eligible borrower has paid to an independent contractor or sole proprietor should be excluded from the eligible business's payroll cost. Now, that's really unfortunate for those who have significant independent contractor payrolls, but I kind of see why they're doing it, because you're not paying payroll taxes on those people, so you're not giving the government money on those employees on a regular basis, so that's probably why they did it that way. However, an independent contractor or sole proprietor will itself be eligible for a loan under the Paycheck Protection Program and the EIDL grant program if it satisfies the applicable requirements. Now, for paycheck protection, if you just have a worker who you hire as a 1099 worker, they might have a hard time getting the paycheck protection loan. It's not impossible, but if they don't have a business bank account, it's going to be a lot harder to get. They might have success going through either a small bank or credit union, especially if you're in a rural area. That way there's less competition there. I know some CPAs and lawyers are facilitating this as well, so that might be the best bet for them. If you hire contractors, I'll have another video out on that in the next couple days that you'll be able to send your contractors. If you have contractors, help them out. Help them with this process. If you're understanding the process, why not help them and get them potential loans and some more income coming through the door, especially if you don't have work for them right now. I'm sure that would mean the world to some of your contractors. On to the next question. How do I calculate gross payroll without including payroll tax? Now, this one is a little bit confusing too, so I'm glad that they clarified this. In this case, payroll costs do not include the employer's share of payroll tax, but does include the employee's share. For example, an employee who earned $4,000 a month in gross wages, from which $500 in federal taxes was withheld, would count as $4,000 in payroll taxes. So that's where I was initially confused, because I didn't think that the employee's taxes counted towards it, but it does. The employee would receive $3,500 and the $500 would be paid to the federal government. However, the employer's side of the federal payroll taxes imposed on the $4,000 are excluded from total payroll costs. So if your payroll document, your payroll summary from either 2019 or the last 12 months, whatever you used, does not break that down, what the employer's contribution is to federal taxes, then you're gonna have to request some kind of more detailed breakdown to see exactly what you had paid in as an employer, and make sure you exclude that from the loan amount, because I could see that now being a major issue, especially where they're saying you're liable to have accurate numbers. The bank isn't liable to check this. It says a good faith review, but what does that mean? They're processing hundreds, if not thousands, of these loan documents. So I could definitely see loans going through that do not have accurate numbers. getting an inappropriate loan amount and then later having some issues down the road. So make sure you get a detailed summary from either your accountant or QuickBooks, however you're doing payroll. They should be more aware with this now. I'll have the actual Treasury Department document linked below. It's pretty hard to read, and I'll have my summary in the description as well. But that way you can fact check if you need to send some of this information to your payroll provider or whoever you're getting a loan from, because this is new as of today. I'll have that link below. Here's another question. I already filed my Paycheck Protection Program and didn't follow one of these guidelines that I mentioned. What can I do? They say your lender should be able to allow you to alter your documents that need to be altered before the loan is processed. And there also was a stipulation that said if you submitted documents before a certain date, before these rules came out, you won't apply, but I wouldn't expect that too much. I wouldn't bank on that. If there's some change that needs to be made, if I were you, I would go ahead and just make that change. That way you won't have any delay in either loan processing or issues later down the road. Just make that change and be ahead of it. That's kind of the theme of this whole process, is just being ahead of the game and getting things done before you need to have them done. And make your bankers' lives easy too. The amount of forgiveness of a paycheck protection loan depends on the borrower's payroll costs over an 8-week period. When does that period begin? This is another question that I just keep on getting asked, so I'm glad that they clarified this as well. The answer is the 8-week period begins on the day the lender makes first payment of the paycheck protection loan to the borrower. So the day you receive funds, that's when the 8-week period starts. So that's when you need to make sure that you have all your expenses completely tabulated, keep good track of those, and then after the 8-week period is done, I'd say the day after that 8-week period, you call up your bank, you request forgiveness, you see whatever documents they need to request. It might either be receipts, 941 forms, depending on the end of the quarter or not, monthly payroll reports. They're going to request documents to prove this. I'm not going to expect the forgiveness to be an easy process. So you might have to fight for it a little bit. Make sure you have immaculate records of what this is being spent on. And remember, only 75% of the forgiveness amount can go towards payroll. 25% can go towards things like rent, interest payments, utilities. There's a pretty small list of things that can go towards. And it says here, after you're approved of the loan, the lender has 10 days to send you that money and have it in your account. So make sure you have that as well. I could see some delays there on the lending end. Really, I wouldn't expect any amount from this loan for the next at least 3 or 4 weeks, possibly up to 2 months, given how many loans they have to be processing, especially if you're going through like a national bank who is processing literally tens of thousands of loans. I can only imagine how long it's going to take to do all that. With the EIDL, I would also expect about 3 or 4 weeks before you really hear anything, and maybe 2 weeks before the SBA reaches out to you for some additional documentation. And also with that, make sure you keep immaculate records, because it's going to be really important to be able to prove what you had spent these on. Now, if this video helped you out at all, please hit the like button and please subscribe. I'm spending a lot of time on these videos. And until next time, thanks for watching. Hope you have a profitable day.